Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Currency markets are settling right now, but Fed Chair Powell is still talking. He mentioned the Fed plans on expanding its balance sheet a bit, but it's not to be confused with QE. So as well, we have Fed President Evans from Chicago talking about the downside risks in the economy are exceeding the upside risks. The Fed is getting cautious here. In other words, they're also pretty much solidifying the likeliness of a cut later this month. Tomorrow we have Fed minutes, wholesale inventories, as well as JOLTS job openings. So some of the data, especially today, PPI, we saw month over month, the headline read as well as the core read contract. CPI is Thursday. CPI is going to be crucial, and that's probably going to be the last little bit of a question mark. Are they going to solidify that cut later this month? But ultimately, we're seeing the dollar index hold ground. Dollar index, a lot of support, 98.25. It's a trend line going back to June. But even if that breaks, it's going to encourage some selling. But just don't forget that this is a strong uptrend, and it's every time we do get a little bit of an advance, we do pull back, but it's held ground extremely well. Even if we do break that trend line, there's still strong support, 97.5 to 97.80. So you got a whole big pocket of support. Don't get too excited if you are a dollar bear. Really, the path of least resistance is going to continue higher to 101 potentially. And again, we've talked about it many times. It's about the dollar relative to its peers. And yeah, the euro, it hasn't seen much light to the upside. However, you did get German industrial production as well as Spanish industrial production, both beating expectations today. But this is just one data point for each. So it's something we have to start to see continually. Remember, yesterday's factory orders was definitely a dim look at some of the growth numbers in Europe. For the technical levels, you have trendline resistance about 110.60. It's been a strong overhead level that the euro cannot really chew through. Even if it does get through there, there's still a lot of resistance, about 111.5. You ultimately need to get a close above 112, as we mentioned yesterday, to really break this near-term, intermediate-term downtrend in the euro. Now, for the yen, 94.25, that's been the resistance. We're starting to try to see a little bit of basing here today, but just more of a consolidation pattern than anything. It needs to get out above there. We had the double bottom lows. We had the sharp move through the last week, but it just has not been able to follow through. CPI later this week is going to be something that's going to be important to keep an eye on, as well as the equity markets. The yen, it had a little bit of stability given the equity market weakness, but overall, it's still a fairly disappointing move here on the week in the yen. But other safe havens are showing that they're holding ground just a bit here. The bonds have had an overall nice move over the last week. Gold, less enthusiastic than the bonds, and the euro falling back sharply through yesterday, but recovering here since last night's low. So the safe havens in general are looking fairly optimistic, but at the same time, there's argument of that they're a bit exhausted. Again, CPI is going to be crucial for that on Thursday. And then we're looking at the Aussie dollar. Now, one of the trades for the Aussie dollar we're looking at is potentially developing miniature bull flag pattern around 67.5. You had that quadruple bottom low. We moved off of that, and now we're getting slightly lower lows in the daily and slightly lower highs in the daily. This could lead to a little bit of, again, a miniature bull flag, and there should be a little bit of support here. It's going to depend on what the U.S. dollar does. Some of the data last night, especially the Chinese services PMI number, the private survey from HSBC, was not a good number, the worst since March, but it didn't really hurt the Aussie too much. So keep an eye on holding ground right around 67.5, but at least above 67.25 to develop that miniature bull flag pattern near the bottom end of its range. And again, miniature bull flag patterns on a downtrend are not very indicative of a bottom. It's something that you want to keep an eye on. Now, lastly, the Canadian dollar. Good housing data out of Canada today. Really good, but it really hasn't done much, the Canadian dollar in general. At 75, good base there. Couldn't really get going. 75.80, 76. That's the resistance level we've been talking about. It's failed there many times over the past month or two, and that's what we need to get out above. Again, it's going to depend on crude oil, which has been awful of late, and we are bearish crude oil, and it's going to depend on the U.S. dollar through the Fed minutes and through CPI, and then we also have more Fed speak. Fed Chair Powell, believe it or not, is on the schedule again tomorrow. You got Esther George, Kansas City. She is at a senator. She talks tomorrow. So a lot going on this week. Busy week. Give us a call. We're here to help with anything on the board. 312-278-0500. Email us info@bluelinefutures.com. Check our website for updates. Sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.